Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Monday, the 10th of February. I'm Daniel Lam, your host for the podcast. With Trump 2.0, there's certainly no shortage of news. Now, from the time of inauguration, where he was seen as going softer on tariff, we're back 180 degrees, with him announcing 25% tariff on steel and aluminium imports, as well as a number of tariffs to retaliate many countries, which he'll be announcing this week, so he says. So this news effectively, quote-unquote, trumped over last Friday's healthy U.S. non-farm payroll. Now, payrolls rose by less than expected at 143,000, down from an upwardly revised 307,000 in December, leaving the 3-month moving average at 237,000. However, the labor participation rate ticked up and wage growth was steady at 4.1% year over year, which is above expectations. The markets reacted positively to the payroll numbers initially before getting sold off on Trump's tariff news. Now, we're seeing this kind of intraday volatility quite often over the last few weeks. In fact, the markets seem to be reacting to tariff news much faster than the times back in 2018 to 2019. Or rather, they're more used to how the price action in the tariff would be playing out based on the Trump 1.0 experience. So this really vouch for our foundation and opportunistic investment approach, where we advocate our clients to have a part of their portfolio in longer-term foundation investments, as well as an opportunistic, more tactical part of the portfolio. Now, for the longer term, we believe Scott Bessent and Trump continue to focus upon the performance of the stock market as well as the U.S. 10-year government bond yield. Now, Bessent, in a recent interview, said that he and Trump are aligned and focused on the 10-year UST yield, not on the Fed's benchmark rate. So at the margin, they may be offering some relief to those who are concerned that Trump will try to strong-arm the Fed into lowering financial costs for the U.S. economy. Trump and Bessent will have to deliver on reducing the budget deficit and on reducing inflation. Now, Bessent talked about achieving a non-inflationary growth, and that will require much lower energy prices, hence all the rhetorics about increasing the supply there. Now, net-net, we believe U.S. equities is still a key part of investors' portfolio for their foundation allocation, as well as locking in the currently high yield from the fixed income. To manage volatility in the portfolio, investors should have gold and alternatives as diversifiers. That is all from me for today. As always, if you enjoy these podcasts, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.